Hello and welcome, everyone. This is Matt McCall. Thanks for joining me. We are now live, so I figured out that it goes live right away. It is the 4th of August. I said July. 4th of August, 2021. Thanks for joining me here for another episode of Making Money with Matt McCall, or my bit of my interim, if you will, podcast until we get to the new place and start rolling out some new amazing videos. But in the meantime, I'm going to try to do this at least 2 or 3 times a week. I'm assuming everybody can hear me well, because if not, I'd be seeing on the side over here that you can't hear me. So I assume everybody can hear me loud and clear. And don't forget to post your questions over there. Today's show, though, I thought I'd do something special. I'm going to be out of the office the next 2 days. I'm actually going to play golf. My golf club's right behind me over here with my father for the first time since quarantine. So I'll get out there and hack it up. So going to do that the next couple of days and chill. So I wanted to get one out before that happened. And the market's just closed. I like doing this 4 o'clock, right after markets close. We had the markets down in general today. Well, actually, let's call it mixed. We had the S&P closed down just over 20 points, about 0.5%, just under 0.5% pullback. The Dow down about 323 points, down about 0.9%. We had the Russell 2000 small mid-cap index down 25 points, 1.1%. But then we had the NASDAQ, which obviously is a little more tech heavy, up 19 points, up 0.13%, not too far from the high of the day. So definitely a mixed market. We had oil getting crushed down 3.6%. Gold spiked in the middle of the day, but it ended up closing flat. Silver down 0.5%. We had the US dollar up slightly against the euro. And we have Bitcoin turning around here today. It pulled back below 38,000. We're just under 40,000 right now. In the last 24 hours, Bitcoin's up 4.6%. And many of you know I love Bitcoin long term, and there's going to be a lot of ups and downs along the way. And I know that's going to be the case, and it doesn't bother me too much. But when it comes to Bitcoin, to me, it's kind of put underneath my pillow, let it go. It's a certain percentage of my asset allocation. It's the same thing that a lot of the baby boomers did back in the day with gold. They just bought gold, safe haven, put it away. The difference is I truly believe Bitcoin has a much higher upside, and some of the altcoins have a much higher upside than we had with gold. And gold to me is a dead, lost asset class. I think it's over for gold. And you'll have some years where it's up, some years where it's down. But overall, I think there's just so many better inflation hedges, safety hedges, just hedges in general, honestly, out there, Bitcoin being one of them. Swat. I love Ethereum too. I think Ethereum, second largest. I like Ethereum as well, and I own some Ethereum for myself along with Bitcoin. So what I want to do today is I am going through. I have a watch list that I keep for my clients at Penn Financial Group, and I'm going through this watch list, and I picked out just 10 random. But I took one from each sector that I look at: industrials, financials, etc. I took one stock, and you're going to notice that you're not your traditional finance company. It's not your traditional industrial company. And none of this is buy or sells or anything like that. These are companies that I think you should put in your watch list and maybe look into a little bit further if there's something that kind of catch your eyes. Before I jump into that, though, I've had a lot of time recently to do a lot of reading. One book that's my favorite, and I should grab it over there real quick, but I'm not going to. It's by Peter Diamandis, and I've talked about this in the past. It's called The Future is Faster Than You Think. A friend of mine just read it recently. She loved it. Another guy I know just read it recently. He loved it. I've read it several times. I keep it with me when I travel. I refer to it back oftentimes. I'm using a lot of great information from there, writing my book, The Roaring 2020s, which my goal is to have it done by the end of September. I'm redoing some things due to my situation, so I'm rewriting a couple of chapters, but I'm working on it as quickly as possible. The problem is the future is faster than you think, as Peter Diamandis says. And what's happening is I'm noticing that as I'm finishing my chapters and I go back, things have changed. The transportation, for example, new deals for flying cars coming out, new EV news coming out. It's just constantly changing. And when you're investing in innovation like this, it's going to happen. But that is one book that I highly recommend everybody read. It will really open your eyes. Another one that is a classic, originally I think it was published in 1989, and it's One Up on Wall Street by Peter Lynch. And I just started rereading it again last night. I was laying in bed, I couldn't sleep. And I read the intro and something else, and then the chapter 1. That alone Get that on Kindle. Maybe it's like $10 or something, or get a copy of it because you can highlight it up. If you read that, it's going to sound like I wrote that. I was only 13 years old when it came out, and what's amazing is my way of thinking was even before I read Peter Lynch's book. But it's one of the greatest investing books, Caesar. It's such a great read. He updated it in '99, 2000, so that's the last update. So it's still kind of funny, some of the stuff that you read because it's so long ago. It's 20 years ago, 2 decades ago. But the thing is, the premise about how he comes up with ideas, how he talks about 10x, and how these winners make a difference. It is worth your time to read that one as well. And I just started a new book called 2030. I can't remember what the subtitle is, but it's pretty damn good so far as well. So I'll let you know how that one turns out. But I would definitely take a look at those for you. Or take a look at those when you have time to get some reading done, especially this summer. If you're heading to the shore or somewhere else, want to get away from the kids or grandkids and some quiet time, it's a great thing to do. So let's jump into it. I'm going to go through these 10 stocks. No specific order, no buys or sells, just kind of going through it. The first one we're going to take a look at is Rockwell. So the first sector we're going to look at theme is industrials. And for me, industrials are not what you would typically think. When I think about industrials, I kind of break it down into 4 different areas. And I take a look at robots, automation, 3D printing, AI and machine learning, and another one I call supply chain / America first, kind of fixing that supply chain issue that we saw that happened during COVID. So within here, I look at stocks that meet all these different criteria, and they're all over the place. But one that I chose for today was Rockwell Automation, symbol ROK. It's had a hell of a run recently. It's a $36 billion company. And as the name says, automation, it is a leader in industrial automation. And you think about the future of manufacturing and the future of industrials, this is the type of company that will be a big player in that. Growth isn't huge. You look at the projections, it's not big growth at all. They have sales around $7 billion, not creeping up too much. However, this fiscal year looking to earn about $13 a share. So it is making some good bottom line money. The stock today closed at, let me pull it up, the market just closed about 9 minutes ago. It closed at an all-time high, just under $312 a share. This is a company, you go back to early 09, it was trading at 20, just below $20 a share at 19, and now it's at 312. And again, this isn't the kind of company you think that's going to be a huge winner, but this was a 15xer, if you think about it. So big upside in companies like this. Can it keep going? In my opinion, it can, because I think you're going to see the manufacturing industry / industrials be completely rewritten. By the end of the roaring 2020s, you won't recognize what manufacturing plants look like. So that's stock number 1. Stock number 2 is from the financials. It's one I've talked about in the past. It's called Lightspeed POS, stands for point of sale. Symbol is LSPD. This is a SaaS company, so software as a service is what that means, for point of sales, as well as doing back office and that type of stuff, connecting with clients and customers, mainly for small and mid-cap companies. Deals with retailers, restaurants, highlights golf courses, which is strange, but I'm going to play golf tomorrow. Maybe they'll have it. I'll ask them. Areas that with the reopening should do well. Again, restaurants, retailers, golf courses, all make sense. A lot of things opening right now, a lot of demand for all that stuff. About $11.7 billion company. Now it's based up in Canada. Looking out the next couple of years, annual revenue growth is big, 37%. Bottom line earnings, 15% annually. Had revenue of 175 million last year. By 2024, so a matter of 4 years, jumping at 830 million. Not yet profitable, and it's still an expensive company. Even though it's growing like weeds, it is still an expensive company. If I take a look at the chart of LSPD, went public back in 2019, trading just below an all-time high. I love the action in the chart. I just think it continues, and I think it's in a really nice little niche area right now. And I see a couple of questions on the right-hand side. I'll get into those after I go through these 10 stocks here for you. Number 3 is energy. And again, very different when it comes to energy for me. I break energy down into several areas: solar and wind, next generation batteries, upgrade of the power grid. I still have oil and gas in there, and then energy storage. So a little bit different than your typical. I picked out of here a company that's maybe not exciting to you, but I think it's got some big upside. It's called Vistra Corporation. Symbol is VST, and it actually falls under a utility, really. And the stock got hit pretty hard at the end of February, falling from 24 down to 16. Actually, fell below 16 in May. We closed today at 18.91, down a couple pennies, but it's been working its way up from the low back in May. I like this company because it's not large, but it's large in some of our small ones, $9.1 billion, but it's expanding big time in the solar, also into some nuke plants, as well as energy storage facilities. Three areas I like. Revenue growth is not big; it's slight. However, it trades with a price of sales based on this year's numbers below 1.0, so that's fine. It's cheap on that area. Earnings are looking to bounce back. They pulled back a bit last year to $2.20 next year. And based off the fact that it's trading at 18.91, it's trading at a forward PE ratio of less than 10, price to sales less than 1. It pays a dividend yield right now, forward dividend yield of 3.17%. So it's very interesting. The chart's not the greatest, but I like the way it's been coming back from the lows. And again, you want to diversify the portfolio too. Not everything can be pure innovation, pure growth. I have nothing wrong with that. But you know, when you take a look at this, I really think this is something where it's a great diversification to the portfolio. All right, number 4 is healthcare. Again, my healthcare is going to be a little different than other people. When I look at healthcare, I look at biotech, I look at drug discovery and AI, telehealth and wearables, Chinese biotech, genetics. I look at longevity. And the company I came up with is, again, one that I've talked about in the past. And this is Natera. The symbol is NTRA. And this is a very interesting company. It's about a $10.3 billion company. It has non-invasive prenatal testing, and they test for chromosomal abnormalities. What's nice about it is it's just a simple blood draw. So there's not a lot going into it. They have several other tests that are based around that as well. They have other genetic tests that they use. Revenue is growing, top line next couple of years about 22%, bottom line about 16.6%. Not yet profitable. However, this is the type of company that is a game changer. This is something I think that you'll see every pregnant woman have this. You know, why wouldn't you have a prenatal test to test for any chromosomal abnormalities that could happen with your children? So this is one I like, trading just below an all-time high. I think it's going to break out above that 125 level and absolutely take off. Close today at a $1.1452, up nicely, up 3.3% today. Number 5 is transportation. You know, transportation is pretty straightforward. However, I break it down into electric vehicles, autonomous vehicles, batteries, charging stations, logistics, and then urban mobility. And within there, the one I picked today is Li Auto, which is symbol LI. It's one of the big 3 Chinese electric vehicle companies, along with XPeng, which is XPEV, and NIO, which is NIO. It's a $30 billion company. They had some really good numbers for July. They delivered 8,589 of the Li Ones. It's an SUV, 6-person SUV. That was up month on month, not year on year, but month on month, 11.4%. Year over year, sales with deliveries were up 251.3%. You know, it's amazing. They continue to hit like record numbers, I feel like, every month. And again, that number of 8,589 is an all-time high for any month. So going through the year to date so far, deliveries are at 38,743, which is great. I mean, that's something that it doesn't sound like a lot, but you know, since this was introduced, they've sold about 72,300, and they're looking to roll out some new stuff later this year and into next year. They're expanding into direct sales. They have a servicing network. At the end of July, they had 109 retail stores in China in 67 different cities. They also had 176 servicing centers that are Li Auto authorized. You know, and they also have body and paint shops that are authorized as well, that are in 134 cities. So it makes it very accessible to users all around the country of China. So that's one that I really like as well. Big time upside potential. Bottom line, top line, huge growth when it comes to Li Auto. Next, we're going to take a look at is commodities. And commodities, There's not a lot out there that I really like right now. You know my view on gold. I do like silver a little bit, but I like MP Materials, the old Mountain Pass. And MP is, to me, the only pure play rare earth minerals company that's publicly traded in the United States. It's a $6 billion company. Its revenue next couple of years expected to grow by 28% top line, earnings 41%. That's a bottom line. By 2023, you'll see 560 million in sales. Profitable this year, believe it or not, at 40 cents a share. By 2023, it's only 2 years from now, a buck 52 a share. So this has the path to profitability happening already. It's got huge upside growth. Bottom line's growing well. It's in obviously a very niche area and high need. It was down today about 4.2%, 35.80. This is one that I put away that could be a 10xer, and I look at it at the end of the decade. This is one I just let go. I love this angle of this. So this is something where I don't even think about this. I put it away and let it go. So that's what the symbol is for MP. The symbol is MP. Matt Paul. See, I picked two Bible names there. Catholic schoolboy. Where the hell am I? So next is technology, and within technology, again, there's so many areas I can look at, but I look at software. I look at quantum computing, big future. 5G, obviously, big future. Artificial intelligence, huge future. Data analysis, big in the future. Internet of Things, big. Semis, robotics and automation, AR, VR, augmented reality, virtual reality, all big upside potentials. And a lot of them are obviously alive and kicking right now pretty damn well. So what I came up with here to share with you is a smaller company, just under $1 billion. And it's in healthcare, but it is a technology company. It's a digital health company, and it's called Optimize RX. The symbol is OPRX. They are, as I mentioned, a digital health company. They have like a messenger. They have an insurance angle. They have a virtual patient support. It's used by doctors, doctors' offices, pharmacies, all connecting. It's something where that is where the health industry is going, especially consumer facing. Huge growth. Top line next couple of years, revenue growing 31.4% annually. Bottom line earnings 90% annually. Revenue was 43 million in 2020. By 2023, 119 million. Earnings per share this year 19 cents. And that's the first time they're turning a profit. By 2023, a buck 51 a share. I mean, this has some big. If this hits its numbers, this is one flying on our radar. Up 4% today, at $58 a share. It's got a double top in around $62, $63. If it breaks above that, it takes off. You got to keep in mind this stock early 2020 was around $6.50. So it's already almost a 10 bagger. But I think less than $1 billion, big upside for a company like this. Number 8 here is the consumer. And again, consumer could be anything. It could be all over the place, anywhere where consumers are spending money. It could be e-commerce, housing, what I call insurance 2.0. The future of insurance will be very different. Buying cars online, future of real estate, online education, you name it. It could be a lot of different stuff. So I came up with a company you've all probably heard of is Peloton. Peloton's a $35.6 billion company, so it's not that big. But what I love about it is not just the bikes and the treadmills, is the reoccurring revenue that it gets. Because when you pay that much money for a exercise equipment, and it costs, I think it's $40 a month for the software, and you don't even have to have that. You could buy the software, the app, and just download that and do other exercises. But when you're paying that much for a piece of exercise equipment, you almost feel guilty that you have to continue to pay the $40 if you're not using it. People are using it, get hooked on certain people, they use it as well. It's motivational, it's why you have it. It's kind of, instead of a gym membership, hey, it's only $40, I do it right in the house. Top line revenue growth expected to grow 20% in the next couple of years. Bottom line earnings 44%. Revenue last year 2.95 billion. By 2024, looking at 8.4 billion, so big growth. Earnings per share flat this year, but by 2024, $1.60 a share, profitable next year as well. So big upside, going forward. And I think it's underrated. I think you could see it much higher. I think that 8.4 billion could be about 12.4 billion if they hit all the boxes and things continue to move in the direction they're going. And me as a owner of a brick and mortar fitness facility and looking to actually expand my empire there. Look this weekend. I still think there's a place for both. I think there's a place for brick and mortar. I think there's a place for something like Peloton. So I think this is a great looking company. And when I look at the chart, it's pulled back from the highs around 170 it hit in January. It's at $120 right now, $120 a share, up a little bit today. Man, it's forming what we call um, a triangle, where a symmetrical triangle where kind of the lows are coming down, the highs are lower, the lows are higher. It looks like this. And when it breaks out in the prior trend before it's an uptrend, it could run to 140, 150 quick. So I think Peloton looks great here. Two more, infrastructure. Infrastructure, if this bill ever truly gets passed, who the hell knows what's going on with it? I like a company by the name of Dycom. Symbol is DY on that. And the reason that I like that is a couple different reasons. One, I think that we're going to see some type of big spending on infrastructure. It's a contracting engineering firm, but it basically, to put very simply, it lays the fiber for rural 5G. And part of that plan is to get 5G out to everybody in rural areas. $2.2 billion company, so not that big. PEG ratio is PE ratio divided by growth, 0.7, which is very cheap. Even though top line growth is only growing about 8% a year in the future, but bottom line, 44%. We also have the price of sales well below 1.0, and earnings per share expected to jump up to $5.68 a share in 2024. Dycom closed today at just above $69 a share, down 2.4%. So you can see there's big upside potential. Stock was above $100 a share in March. I think it could be back there next 12 months. I think there's big upside with this, which gives it, from here about a 42% gain or so just to get back to the high. And it's a nice way, diversified portfolio, play the infrastructure, play 5G. A pretty interesting play. Somebody asking, what was the symbol of that one? Dycom is symbol DY, Delta Yankee, for that one. Thank you, Donna Reed, for helping out. Yeah, if you see people in there with questions, you can help them out in there. If you can see other people's questions in the chat. This is a community, so let's help each other out. All right, so the last one here is going to be international. And international can be anything. And a lot of stocks I have in other areas fall into international. I came up with C Limited, and the symbol there is SE. Stock today closed at $293 a share and a penny, up 10 bucks, up 3.55%, just off an all-time high. This stock has been unbelievable since 2018, when it was down around 11 bucks or less than $11 a share. So this has been a 29 bagger since end of 2018. So in less than 3 years, a 29 bagger. This just shows you it can happen. I love this company. This is a company that's based out of Singapore. It's a big company. If you've never heard of it, it's a $148 billion company. It's involved in e-commerce, fintech, and gaming. Three really big trends I love. Top line growth next couple of years, growing 29% annually. Bottom line, 66%. By 2023, expected at $15.8 billion in sales. Profitable also in 2023 for the first time. What's fascinating is a lot of the Chinese companies, especially tech companies, especially companies in fintech, especially companies in e-commerce, especially companies in gaming, all have gotten hit. C Limited is trading just 1% or so off an all-time closing high. Boy, look at that diversification it gives you. I really like that. So those are the 10 that I have. And again, that symbol is SE on that. So let's go through some of your questions here. I'll take some questions before we wrap it up and I head into a long weekend here. Let's see what we got. I'm just going through the top. Somebody asked about CLST. CLST is I don't know, that's not a company, so might be the wrong symbol. So if you want to put that in, it looks like Volente put that in there. Also asked about Sonos, SONO. I don't I have much of a view on Sonos. I do have a Sonos, and I have a Sonos for my fitness facilities. Those are in the studio, and I've always liked it. We've had some issues with it, but I've always liked it. Sonos is a $4.2 billion company. And of course, it's got the speakers. They're similar to the Bose. I have a Bose one right over there that I actually think price is probably a little bit better. As I mentioned, $4.2 billion company, trades with a current P ratio of 34.6, PEG 1.2. So it's actually fairly damn cheap. It's got a revenue coming in this year about 1.4 billion, up to 2.2 in next 2 years. Top line growth 12%, bottom line growth 28%. Going to $1.47 a share in 2 years. Doesn't look bad. It pulled back from a high in the 40s, and it's been consolidating really down here for quite a bit above that 31, 32 level. It's at 33.60. if it could break above 35, I think it could run. So I think it's not a bad looking play. All right. Novavax, BioNTech, EXPI. Somebody asked about. Novavax, I still like. Had a big day today. It's up 18.6% right now. Closing here be the best close since May. Regardless of what you think, I went to the doctor today because I still have like lingering symptoms from COVID, long COVID. I have a cough I can't get rid of, but I'm 100% fine. She listened to my lungs and heart and did the thing. My blood pressure was even normal, 120/80. I mean, shit was good. But I was not vaccinated when I got it, and she said, no reason to get vaccinated yet. In the future, potentially, if I want to. But Novavax, I think, will eventually be around because I think you're going to keep seeing vaccinations. They're required in New York, and if they get the approval by the FDA, it's going to be big for that company. I think they might get it. BioNTech, obviously, is with Pfizer. That stock was up huge today, up 18% to a new high. That stock has more than doubled in 1 month. Unbelievable. So yeah, I mean, I don't know if I would chase him and buy him here, BioNTech, for example, but it's tough to fight it. The last one a person asked about was EXPI, EXP World Holdings, which is a kind of future real estate company, up 33% today, closing at 46.22, best close we've seen since April. I love this company. It's consolidated, big numbers today, closed up huge volume. I like it right there. So let's see. Vlad's asking about On Track, OTRK. It's just, it's one of those stocks. I like it. It's just, it's got to get out of its own way. You almost want to say it's one you have to have patience with. It's only a $500 million company now. They use artificial intelligence for treating outpatients. They have telehealth company as well. It's everywhere it needs to be. And if I take a look at valuation, I think it's extremely undervalued. I take a look at the potential numbers, and by 2023, you're looking at just about $200 million in revenue, close to turning profitable in 2023. But you have good growth. You have top line growth annually 35.4, bottom line 64.7. If it fulfills what it's supposed to, this company to me will be back around $60 to $70, which is more than a double from here. So I think this one I'd be patient with it, put it that way. All right, just keep going down today. Somebody asked about MOXC. I don't know what that is. MOXC, I have no idea what it is, but it went from pennies, it looks like, to $30. It was down 34% to $9. A little too much for me. MTBC is a small company, Care Cloud. Had a nice day today. Again, closed at the best level in the month. It breaks above 9, it takes off. I like this. This is in healthcare IT. This company I like. AYX had some earnings that was down today to a new yearly low. Numbers weren't good. It keeps falling. I love what this company potentially has, but you may want to come close to cutting it just because it's just not acting well. Every time it reports earnings, it keeps breaking down. I'd have to analyze a little bit more and see, but I don't like the way it's acting there. Solo, not a fan of that. That's one of the EV companies that were hot back in the day. Fisker, Solo's SOLO, Fisker FSR. I don't like Fisker either. It's one I'd stay away from. Skills SKLZ. Man, that was down 10% today to 1220. That's in gaming company. I don't mind Skills, but again, it's when these companies are breaking down, you don't want to catch a falling knife. This is the lowest close we've had this year, so you kind of want to stay away from it at this time. KPTI, I always talk about this one. I still like this long term. I think you have to be patient with that. It's a biotech. Let's see. Take-Two and Activision both had earnings. Take-Two, I thought the numbers were great, and I find it almost comical. The analysts come out and be like, well, the growth isn't as much as it was when everything was shut down, everybody's playing games. No kidding. It's not going to be that good. But I still like Take-Two. I think it's a great company. Activision came out with earnings last night. That stock was up about 2.34% today, but it's well off the highs. I still think gaming is going nowhere, so I still like that. CLSK, okay, was a symbol. CleanSpark, CleanSpark I like back, and the company went up like 5-fold after I talked about it on a podcast maybe 7-8 months ago. It's been in a clear downtrend since then. I don't like the action, so I think there's probably better plays out there at this point. Bitcoin, I love Bitcoin. The action today is great. I really like what's going on. And again, I just still think you're going to see more and more companies adopt it. And it's a patience. I'm not using that word a lot today, but it's a patience thing. And again, I talked about this earlier. If you have not read it, it's a must read for any investor, but it's called One Up on Wall Street by Peter Lynch. Originally wrote in 89, I think, when it came out. Redid it in 99, 2000. So it's kind of funny some of the stocks they talk about, but the first 40 pages, you'll read the whole thing. It's an easy read, but the first 40 pages just talk about how you have to have patience. He talks about, he's one of the greatest mutual fund managers ever, Fidelity Magellan, how he held on through ups and downs, how he missed some. It's every individual investor must read this. Once my book's done, I'm going to put that in the same category because it's going to be very similar to what that is, helping the individual average retail investor, not Wall Street. They don't need any help. The average investor. All right, let's see where we at here. Costco, that is old school. Costco, heck, what can I say about Costco? It's at a new all-time high. I mean, in March, it was at 300. Now it's at 436. Let me take a look at the fundamentals. I haven't looked at the fundamentals of Costco in quite some time, I'll be honest with you. Costco is a $192 billion company. Trades here, PE ratio about 41 is kind of high, PEG ratio of 5, price to book 11.7. So it's high. Growing top line growth 7%, bottom line growth 8%. Earnings per share looking out to 2023, almost $13. So even based off that, it's trading at over 30 times 2023. So it's not cheap. It isn't cheap. It doesn't mean a stock can't keep going. Don't get me wrong. But I would be watching it. I wouldn't be buying it here because I think it's just due for a natural pullback. It's very overbought in the midterm. So it can pull back to 400 and still look extremely healthy. But, that's about a 9% pullback. But again, if it's a long-term hold, you'll ride those ups and downs. I think it looks fine. DM, which is Desktop Metals. I love 3D printing. I think it's one of the most underrated areas in the entire market. I like Desktop Metal, but I like another one that I have for clients. I'm not going to mention that's held up a little bit better. I don't understand why it's not holding up. I thought it'd be doing better, honestly. I really thought the 3D printing stocks as themselves would be doing better. I thought Desktop Metal would be doing better. It's about a $2.3 billion company. Doesn't have any earnings yet, but 2.4 price to book, which means it's fairly cheap. You got top line growth at 46%, bottom line growth at 70%. By 2023, 340 million in sales. And that may not sound like a lot, but that's up from last year of 16 million. Looking to turn profitable also in 2023. I think there's huge upside for this. Again, this might be one you probably have to be pretty damn patient with. I don't know where it goes in the near term, but I would be very patient with it. DTIL, that's a bit of a genetics play. It's a small genetics play. That's one you put away and let it go. Precision Biosciences, DTIL. Yeah, I let that one go. I still like it though. Asana, ASAN. This is a company. I use it for some work stuff. It's actually a really nice program. It helps kind of organize things, get things on schedule, hand out roles to different people in the company. In May it was below 30. It's at 72.70, so it's a bit pricey for me here. So maybe a bit of a pullback. I don't know if I chase it. Also, that's that DocuSign, very similar, below 190 in May. Now it's at 300. I love DocuSign. I use it all the time for my business. They're both great products, which you always want to know. Peter Lynch says that too. Invest in what you know. I just think they're both a little pricey right here. I look for a little bit of a pullback. That's all. It's not that I don't like them. I just think there's a pullback potential. AV&W, Aviant Networks, communication company. It's been kind of going all over the place. If it breaks above 41, it looks like a takeoff. I don't know too much about this company, to be honest with you. It is how big is this company? Small, $413 million. Wireless networking products, obviously play on 5G. And it's got a P ratio, low P ratio, price of book low, 2.3. Problem is, it's growing top line sales by 5%. After spiking, and there's a spike in earnings, it's falling back down. Still, though, in 2023, $1.80 a share, not bad. But I'd like some other 5G plays a little bit better when it comes to that. Let's see. Somebody said local gas stations are adding Bitcoin ATMs and also accepting it in LA. LA is a mess, I think, right now. But somebody's asking about. So, chance to be. I can't talk about that. Sorry. If you have any issues with my former place, you'll have to call them. Sorry, I can't talk about it. But I will have insight into my next venture soon. I'm telling you, the moment I know. I mean, people keep asking when. If I knew when, I would tell you. I would honestly tell you. Somebody's asking about Coop, COOP, which is Mr. Cooper Group. I don't know much about this company, but it broke out to a new high yesterday. Let's take a look at it here for you. So symbol COOP, Mr. Cooper Group, $3.3 billion company. It does servicing, origination, transaction-based services to single-family residences. So basically helping with mortgages and loans. So it makes sense. Let's see, take a look at the numbers here. It's got some choppy numbers, but looking this year, this fiscal year, $3 billion in sales potentially. So it's cheap on that. However, earnings are supposed to drop the next couple of years, so that concerns me. Even though dropping, they're still really attractive at 573. In 2 years from now, I'd have to do more work on it, but it's an interesting play for sure. Let's see what else. Redfin, I still love Redfin. I still love Zillow. I talked about EXPI before. I just think they ran up so much and they got hit, natural pullback. I think down here, they're all nice long-term buys. Somebody's asking about Fastly down 20% in after hours. I mean, this is just an ugly looking chart. You go back to 2020, so you're going back quite a time. The stock was at what, $136 a share. Now it's at 36. It just keeps falling. So that's when you want to, don't try and catch a falling knife there. So I asked the name of the Peter Lynch book. One Up on Wall Street is the name of the book on there. Legend Biotech. Yeah, I like Legend Biotech. Play on kind of China. Symbols LEGN on that one. Stock's done great. Rallied to an all-time high. Tweaks ago, pulled back, consolidating. Great looking chart. I like that one. Somebody's asked about Palantir, PALTR. I love Palantir. I think this is one that's so undervalued and just so overlooked. I think it's going to stock that's going to be up in $50 before we know it, and before anybody even knows it. So that's one to keep an eye on as well. Altcoins. I'm not going to talk about any specific altcoins right now, but I do like altcoins. Let's see. NVTA, which is Invitae, which is genetic testing. It's one of my favorite areas. They had some good numbers last night. It was about 7%, bouncing off of a bottom. I love this. I think this stock has much more to go in the upside. Again, a lot of these growth and innovation stocks that I follow, they pull back. You have to realize that there's only so much money in the market. So they all can't go into every sector every day. They rotate sectors. So when you have some of our stocks that we really like, growth and innovation, that were hitting highs in January and February, they have to pull back a bit. And do they pull back for a week, a month, a year? I don't know. But I do see great opportunity in a lot of our trends. Because if you can ask yourself two questions. One, do you still believe in that trend? You still think electric vehicles are a thing? You still think genetic testing is a thing? Is it going to get bigger? Yes. Second question, do you think the company you own or you want to buy will be bigger in 3, 5, 10 years from now? If you say yes, then you want to own that company. It'd be the same thing if your buddy says, come invest in my restaurant. And you say to yourself, well, I don't know much about the restaurant or your restaurant. I go, but you say, I think this is going to be a success. I think it's going to be making a lot more money in 3 and 5 years from now. And it's probably a great investment. The same thing here. Don't overthink it. The simple question is, if you can't sit down and pound a table and say, I truly believe this is going to be a much bigger company in 3 to 5 years from now, if not longer, then don't buy it. Very simple. Do not buy it. All right, a couple more. I'm going to wrap it up. I already talked about CLSK. I don't like it here the way it's acting. Futu, not a big fan of that one either. Let's see what else. Thank you. You're welcome, Troy. But yeah, thank you so much, everybody, for continuing to follow me. It's a kind of an in-between time. just know that behind the scenes, my life hasn't changed. I'm continuing to work as hard as possible, coming up with new ideas. The Roaring 2020 is not stopped just because I'm moving places, doing some things behind the scenes with my career. Nothing there changes. My work ethic doesn't change. So once I can come out with what's next, it's going to be what I was doing on steroids, even better. More me, more raw, more down to the, no more BS kind of stuff. I've always really pride myself on being real. I think when people say something about me, if I'm real, there's no bullshit here, and there truly is not. And I don't want to be selling you stuff. I mean, obviously we have to sell stuff to make money, where it's a business, but I want to educate along the way, and I want you to buy stuff when you're ready. I want you to buy stuff because you believe in me, what I'm doing. I want you to buy stuff because you want to join our group and our family and make money and change your financial future. It's not about selling just to sell. It's about creating long-term relationships. So everything I'm doing in the future, that's what that's based on, just so you know. I'll go through a couple more here real quick, then I got to wrap it up. WHLM. Well, I know nothing about this company. It was up big yesterday. I saw it go across the ticker in CBC down today. It looks, I mean, it's some type of small cap thing. I wouldn't touch it. I don't know anything about it. Somebody's calling me from a spam number right now. Rocket, RKT. This is Rocket Companies. Again, I don't like the way this is acting either. They mentioned they're getting into something yesterday. I can't remember what it was. What the hell did they say? I saw it come across ticker here somewhere. I got to look it up because it's bothering me. What did they say they're going to get into? Does anybody know what Rocket said they're going to get into? There was something weird that I couldn't really see why they're getting into it. Every time I pull them up, all I see is class action lawsuits about it. But if anybody, they're pushing the solar energy. They're going to loan people money for solar energy, and that sounds like a great business model for people to put residential solar industry. The solar and to loan the money. My problem is this seems like a last gasp for a company. If the way housing has been, how is this company not doing better? That's troublesome. So that keeps me away from it. Butterfly, which was a SPAC, BFLY, BFly. Again, these just aren't acting well. And until they start acting well, I don't want to try to catch a falling knife and invest in them. It's a $2 billion company. They have ultrasound imaging solutions that are looking to change the industry. It has some big top line growth, around 67%. Looking to have 2023 200 million in sales. So it's still expensive. It's just a lot of these stocks just don't act well. So I'm not looking to buy them here until they build a base. OLED, I'll do that one real quick. That's Universal Display Corp. I still love that. I think it's a great long-term company. Good core hold. Speedy recovery. Thank you, Nitin. I feel great. Honestly, I really do. There's 3 more here ago. I don't think I like any of them, but I'll go through it. Kango, CANG, I do not like. ME, 23andMe, I did like it, but then I think we got out of it. I think they have a treasure trove of data. Just the people they're not valuing it for what it's worth to me. And until something like that finds a base, I don't want to try and catch it. It's too tough to try and catch that bottom. It's a $3.5 billion company. It doesn't have huge growth, so I would stay away from it right here. And let's see, every time I want to stop, everybody keeps putting in BDSI. That's going sideways. I don't mind it long term, very small company. ALB, which is Albemarle. This is a lithium play. I like it. I like that a lot, even though I think solid states can take over. Still need lithium for near-term future. And then PaySafe, PSFE, again, another SPAC that's just not acting well. So until they form bases, a lot of these, you got to stay away from them, in my opinion. Let them form some bases and then consider looking into them. But I've rambled on for quite some time. So again, thank you all very, very much. The moment I have an announcement of what's coming next, and it's already planned, it's happening. It's just I can't talk about it yet, and you can imagine why. But the moment I can, I will. I promise you'll be the first to know. I'll do a special video, probably do several special videos. It's going to be awesome. So just know that. But I'm going to play golf tomorrow, see my father, see some family, enjoy my time. I hope everybody out there stay safe, be smart, tell somebody you love them, spread the love. Remember, we're here to make money. We're going to make a ton of it. But along the way, we need to enjoy life and have fun. And we're going to do this by building the community we're building right now. We're going to continue to build this community. So share these podcasts, share this stuff. If you have a subscription, well, not right now to me, but when you do have a subscription to me in the future, share it with your friends and family. Let's build this community bigger and bigger and bigger. And we'll still do something in Nicaragua once my house is done next year. So we'll have people down, like the first 10 or 15 people. You can come stay at my place. So again, thank you all so much. Be safe, be happy. Have a good rest of the week and weekend. I'll come back Monday and we'll get ready for the trading day on Monday. But until then, thank you all so much from the bottom of my heart. I appreciate everything and all the support. I'll talk to you all soon. Thank you very much.